been interesting and fascinating that there's just been no bank activity in a lending market that's tens of billions of dollars. But now they're here.
What is Unchained and what do you guys do?
We are a financial service provider for long-term Bitcoin holders. We started lending at 50% loan to value, and it was cash, or real dollars lent against the Bitcoin. There's something important about this network of keys.
Meet Joe Kelly, co-founder and CEO of Unchained, a Bitcoin company that helps you stay in control of your keys while using real financial services. Since 2016, Unchained has secured 100,000 Bitcoin for 10,000 plus clients and originated 1 billion in Bitcoin-backed loans with zero losses. In this episode, Joe breaks down how you can secure your Bitcoin, how to borrow against Bitcoin safely, and how to plan your inheritance, IRAs, and feel safe about holding your own Bitcoin.
By now, a lot more proof that self-custody is important.
And if you have self-custody over your Bitcoin, it's quite hard to transfer it over towards the next generations.
Thinking about inheritance is, there's always has to be two levels.
But what if those two keys are gone?
Yeah, then it's gone.
Before we continue, I would like to ask you for a favor. New Era Finance is designed and started to educate you about the future of finance. And I think that blockchain and Web3 is going to rebuild everything that we know about finance. And that's through those guests and the in-depth conversations that we have. However, more than 80% of you are watching this without being subscribed. And if we get more subscribers and more views, and we can start building this community, we can get better guests, we can improve the content, and we can start building. And in that way, we can start educating you even more. So I would like to ask you for a simple favor to check whether you are subscribed. And if you're not, please do, so we can start and continue to build this channel towards a bigger channel to help you all. Thank you very much and enjoy the episode. Welcome to the show, Joe. It's a very interesting period with all the Treasury companies, with the ETF, with the regulation in the US. What has been the most interesting news item that you saw in the past few weeks?
I mean, something I've been keenly interested in, just as an American, and where Unchained sits in the ecosystem is really the developments on Capitol Hill here towards just better regulatory clarity. We had a bill that passed our House, and now there's ongoing negotiations in the Senate, and I think things that really help protect both the developers and users of open source and blockchain technology and the programs that we use to access them. We felt like we had some setbacks with certain criminal cases like the Tornado Cash and Samurai Wallet cases, but I think in parallel there's been really positive developments in terms of the bills that could come out of the Senate before end of year and really kind of give us all a sense of relief that like the users of a product like Unchained, that self-custody, that right's not going to be infringed, and then likewise the developers of new applications aren't going to be targeted or considered money transmitters just because they built an application that runs on its own and does something. So yeah, really just honestly, this cycle's made me proud to be an American and see our legislatures like put forward and make real progress on something that is so important to our industry.
Well, I mean, I hear that quite a lot, that the regulation in the US is completely shifting and that's opening up the gates towards institutional investors, but actually just adoption in the US. In terms of your perspective, how much is it different compared to the Biden administration?
It's night and day. Yeah. It's almost as much a complete 180. Depending on the quadrant or area, if you're talking about SEC and the kinds of your securities regulations and just what was really very much like a hostile regulator over a number of years and very frustrating for a lot of industry to work with. We don't have a lot of SEC concerns. We're really strictly working with Bitcoin, but I'm certainly sympathetic to what others in different parts of crypto had to deal with in terms of just the confused messaging from leadership at SEC about come in, but like actually don't, or like, but the door's closed, or these kind of things. So, I mean, that's one area. The other areas, we had a fright. This actually goes back to the first Trump administration, where at the end there was this Mnuchin rule, kind of at the end of the year of 2022. No, sorry, 21. That 2020. That could have been about really restricting the ability to take Bitcoin or crypto from an exchange and move it into a self-hosted wallet. That luckily died pretty quickly and early, but that was like an early fright that really caused alarm for certain legislators that stood up and proposed something called the Keep Your Coins Act, which its purpose is to kind of really protect or like ring fence around the idea that Americans can self-custody. And the language is such that it says, no regulator or no regulatory agency can infringe on that right, or like produce rules or things that prevent someone from holding their own keys. So I think that was a version of, while that hasn't passed yet into law, that really kind of started that narrative on Capitol Hill. And then just the idea that you have such momentum around these bills. You had the stablecoin Genius Act stuff passed both houses over the summer, and so that this is just, it's happening almost light speed, really, since it feels like you can track back to the ETFs, and then finally the admin change about a year ago, and then it's a total night and day difference.
If we take a look at regulations, then we've got one in Europe, which is Michaël, which back in the old days when it was basically scripted or created, a lot of feedback came in from the community that it was too tight and too negative, and we're very pleased that has been changed. In terms of the regulation and everything that has been built and the impact for you, how much of an impact were cases like BlockFi and FTX back in 2022?
Yeah, those had a very strong chilling effect. I think the other way the admin change has really affected our business and others in the industry is a little less direct. There's been certainly like statements from regulators like the FDIC or the OCC, which oversee banks on a national level. And what you had in that run of 2022, when those firms were going bankrupt, you already had banks feeling skittish or nervous or like uncertain about doing anything with any crypto companies, or certainly lending against it or taking it seriously as collateral or a balance sheet asset. And then what you've seen, I think, is now more public statements by the heads of those regulatory agencies saying this is okay. We're not going to ask you to like pre-clear crypto activities or ask for permission first. Like, you can explore these things. And I think that tone shift has also started to filter through into kind of the regulators and examiners on the ground. So I think there's kind of a lagging effect of, even if the head of an agency says this is okay, it takes a little while for the examiners and people under them to really kind of get the message and know that okay, truly they can sort of hew to a new type of standard. And so we've seen, certainly in the last 3 to 6 months, a really big uptick in banks, smaller banks, mid-sized banks. We're not so much working with the JP Morgan Chases and Bank of America of the world, but at least for that segment of banks that are faster moving and more willing to adopt technology and just more entrepreneurial, they're coming in, and it's either for many of them it's a stablecoin based strategy, which doesn't overlap with our business too much, but increasingly a lot of them are getting more comfortable with, okay, how do we lend against Bitcoin? Like this, there's been a lot of lending activity happening on this asset that banks haven't been a part of, and banks are natural lenders that they create the money, so it's the best place to go to get capital, or where loans, where the product is money. So it's been interesting and fascinating that there's just been no bank activity in a billions of a lending market that's worth billions of tens of billions of dollars, and but now they're here and it's coming in, and there's more and more deals getting done that have banks as the lender.
Well, we are definitely going to talk about that. It's just every time when I go to a conference nowadays, the big topic is how to create yield on your assets. It's just a lot of companies or protocols are trying to build something. So I would like to touch upon that with you as well. But before we get there, Unchained is around for 9 years.
Yeah.
Ish.
Yep.
How has it been to be basically proposing your company towards institutional investors back in that period? Or was it just Web3 alone, and Web2 you were just leaving them there and just wait until the right moment? How was like the first few years of building the company?
Yeah, I think Unchained has our core has always been individuals. I'd say, arguably, and that's kind of, I think that follows the trend of Bitcoin largely, where it was first really adopted by individuals. Early on, they might have looked like retail investors, but by now, if you're a retail investor in Bitcoin 10, 13 years ago, you might be an institution yourself with the family offices and all that. So I think that's kind of the trend, or like the key place, the key swim lane, Unchained has kind of gone into, while institutions tend to have a lot of different requirements when they're just starting out. Whether it's like the type of business account permissioning they need. A lot of early institutions we certainly talked to were people who were trying to raise capital from to invest in Unchained. And so criticisms like, well, I don't want to hold my own keys, or what about other assets beyond Bitcoin? Those did make it harder. Those were kind of friction points for Unchained not being the right solution for them. And so, like any startup, we've had to go through this kind of journey, constantly refining what our focus is and acknowledging where there's things we have to say no to. It's definitely a classic startup. Failure mode is trying to do everything for everybody, or serve every client possible, and that's usually, frankly, impossible. So, there's some differences. I'd say Unchained has some institutional-like clients, but predominantly 95% of our business is individuals or individuals and their small companies, kind of a thing.
If you go back in time and you had all the knowledge you have right now, and you just apply that to that period, what would be the one single thing that you would have done different with all the knowledge you have right now?
We started with, I think, frankly, what was like the hardest product to launch, which was lending. Lending, and there's kind of a little bit a naive, I don't know, like masochism almost with that, in that we saw lending as this area of multiple concerns you have to solve at the same time. You have to solve regulations. Being a financial institution that lends dollars, you need to solve the custody for the Bitcoin. Where does it live when it's collateral? You need to solve the capital sourcing of like where you're going to get the dollars to lend out, and then you need kind of an application and like a service desk and like ability to sort of take care of clients through all that. So that was a very encumbered product with like a lot of work, and it's fortunate because it did lead ultimately to the custody that we developed for it became later a standalone custody product. But yeah, if I were to be able to go back in time, I would have inverted that sequence and just started with custody. And we kind of thought, then again naively, that maybe custody was a solved problem. People did have exchanges, people did have BitGo, people did have hardware wallets. So we thought, okay, like we're not trying to be yet another custody solution, but we found over enough time that what we were doing for custody, at least for lending, was still distinct enough, different enough, differentiated enough, and there is this market for multi-sig based collaborative custody type services. So yeah, we would have had a lot easier time, I think, like starting there than starting with lending, because so much of the journey over the years was, especially as there were no lenders, as we talked about, there were no banks. So like just sourcing capital for lending dollars against Bitcoin, which looks like this just on a simple-minded basis, like this is the best collateral. And so just beating your head against the wall of like trying to explain to people why and how it is such great collateral, like just the kinds of assurances you can have as a lender that don't really exist within other assets. But I've learned credit and credit investors they try to be rational, and they're generally very conservative, but still it's not necessarily like an efficient market in the way that when we try to look at things like cleanly of what is good collateral versus what is not. It's a very distorted market still.
Well, that's for sure. I'm a trader, a high frequency trader. I see a lot of inefficiencies if you go down the list on the of coin market cap and on DEXs versus SEXs, or within pairs alone, or it's just it's so inefficient that there are still a lot of opportunities, but that's a whole different ballgame. For people who are listening, in short, what is Unchained and what do you guys do?
We are a financial service provider for long-term Bitcoin holders. And that's really been kind of our North Star. Thankfully, as a company and a startup, we haven't had to really just pivot from that client set at all. As I mentioned, there are some ways our product portfolio has expanded. We do lending, custody, trading. We have IRA accounts, retirement accounts for people to hold their Bitcoin in the U.S. And more recently, we've launched an RIA, or a financial advisor subsidiary, that's now merging with a trust company that we've started. So we can also kind of facilitate some of that higher end, trust management, trust creation, trust administration type of scenarios that clients get themselves into, as now they have maybe tens of millions of dollars in Bitcoin and want to put it in structures that are an advantage for tax reasons or estate planning kinds of reasons. So it's now this more kind of full suite financial services set of products and services that we provide to clients. And we have roughly 10,000 clients in the US. We help secure $12 billion of Bitcoin today. And it's all done in a very unique custodial format that's actually non-custodial for most clients. They tend to hold a majority of keys necessary to move their Bitcoin. And so it is like a different and unique format, much unlike a lot of the other financial services providers of prior cycles, like the BlockFis you mentioned, who, we can get into this, but like philosophically, I look at it like there's a very, fiat kind of minded financial services playbook of gather the client assets, build that up, now possibly lend those out or place those into treasuries or securities that the either the custodian or that central financial service can then kind of mine that for their own type of yield. And lots of traditional businesses work this way. If you're looking at like a Schwab, I think, this is years back, I don't know what it is today, but at least 60% of Schwab's revenues was just the client assets sitting in deposit accounts that they then would put in treasuries and earn a couple percentage points on. So once those client deposits reach the tens of billions and they're still making, Schwab is making a few percentage points on that, it can really add up. So Unchained has never really had that privilege, but it is something that a lot of the early, it's a business model early sort of pioneers in the space tried to bring in. And we've always tried to maintain how can we do things in more of the Bitcoin native way. Bitcoin doesn't really work as it's not a credit or debt based type of asset. It's not on some central ledger. It's on decentralized ledger. And there's no backstop. There's no way to print more if you lose it. So not losing it is really kind of job number one. And that's where Unchained comes in. And so when it comes to things like our lending practices, we've never rehypothecated. Therefore, we've never had a loan loss. We've never lent out Bitcoin. Bitcoin lending markets have just always been very kind of nascent and not really necessarily a very good risk-reward trade-off. There are a few niches where it makes sense, but on the whole, the kind of consumer deposit account type model that the Celsius and BlockFis and otherwise started up and gathered a lot of clients and deposits with, those did lead to ruin for a lot of people, really, because there was only one borrower, one place that all of that Bitcoin is going. It's basically some black hole of a hedge fund in Singapore kind of a thing. So I think just hewing towards more of a asking ourselves, Bitcoin is new enough. What is it asking of in terms of the next generation of financial services that use Bitcoin? It might be faulty logic. It might be a faulty assumption to assume we can just do the same thing that the kind of fiat environment supports. So what does a new financial system with Bitcoin at the root look like? And so we're kind of on a quest to really answer that and build a kind of financial service that discovers that.
Well, I mean, you have a lot of products right now. It's the custody, it's the lending, it is the IRAs, inheritance, and some more. The first question that I have when it comes to this is are all of these benefiting the thesis? Because quite usually, if you have a founder or if you're building something, they always say or claim you need to have focus.
Mm-hmm.
But in your case, it seems like the custody part has been built and now the clients are basically asking for more. So it's kind of why and how you have designed the current, I would say, product stack that you have?
Yeah. Some of it is just kind of assembling the basic building blocks of something that looks a lot like a wealth management style institution. And again, I think the part that's advantage Unchained is, well, our product suite is somewhat broad and wide, especially for a young company. Our focus of clients in terms of these long-term Bitcoin holders, that's been tight kind of always. And so that provides some of that, that's hewing to that startup heuristic of maintaining focus. And then it's always just been somewhat clear to us, especially having started as lending. Well, man, lending is quite cyclical. Not everyone needs a loan all the time. So how do you have a product that can that's evergreen, that can always attract clients, and people are always interested in having secure Bitcoin custody. It's always a problem for people to understand how well can this pass on to my family or my heirs. And so that building out more of the kind of platform that can bring on clients no matter where they're at, or at any phase of life, that was important. And and then these all kind of work in harmony. Having a trading desk means people buying and selling in their IRA can work. Where you store your Bitcoin is most naturally you'd want to have convenient access to buy sell through that, or take a loan if you're not interested in selling but need liquidity. So it's the kind of thing that I almost liken it to like just a convenience store model of like, once you have the Bitcoin in one spot, how can you provide all the services and things that make that the most convenient place to still keep the Bitcoin, and do it in a way that we can't prevent our clients from moving their Bitcoin elsewhere. It's unlike a Chase or a JP Morgan or a Bank of America, where your $50,000 in that checking account, you want to wire it out, like they can block that, or like they might have a $25,000 wire limit, so it takes 2 days to get your money out. But if you're securing with Unchained and you have the majority of keys, like most of our clients do, at any time you can go use an open source wallet. You can just go. They have a sovereign recovery backdoor, basically, where you can move the Bitcoin without Unchained getting in the way or intermediating that. And so that also kind of raises the bar for us to say, how can we make the experience at Unchained so valuable for our clients that they're not interested, that it is still like the most naturally convenient and secure place for them to keep their Bitcoin.
Well, I'm very interested to hear the thought process behind the way you look at custody, but also lending. But first, the quite obvious question, which is, why did you choose to be Bitcoin only?
Yeah. I mean, early on, I'd say my co-founder and I, this is our second company we started together. He's more the technology background. The first startup we had was in big data, dealing with large data sets, and that required understanding distributed systems, understanding how multiple computers have to talk to each other, maintain some form of data consistency or data availability across multiple nodes. And so that era for us, from about 2008, 2013, we learned a lot about how those systems need to work, what are the constraints on them. And so as my co-founder was able to read and understand that the Bitcoin white paper saw this as really solving a clear problem, or having like the basis of some sound technology around those kinds of issues. And we maintained an open mind in that as entrepreneurs, we want to serve customers and serve clients and what they need. And so you have to start somewhere with any business. We started with the biggest cryptocurrency, Bitcoin. And we did early on because we heard a lot of feedback from clients of like, oh, it's great, I can get a loan against my Bitcoin. Can I get a loan against my Ethereum as well? And so we thought, well, then maybe that's the next thing we should do. So that, and we endeavored through that time to also build the maintenance or the security for the Ethereum collateral in the same way we built it for Bitcoin. There was a lot of headlines to that era of like 2017 and 18 of these different smart contract hacks, or like multi-sig wallets that were on Ethereum that were hacked. In a lot of ways, those hacks came through just almost an abundance of features that these smart contracts would have, that then like one of them could lead to an exploit. Contracts that, without moving the actual asset maybe in that contract, you could swap out one of the key holders, or you do all these kind of complex functionality, whereas Bitcoin is a very quote dumb, simple multi-sig kind of scripting around how it's locked up. So we always used multi-sig for how the loan collateral was secured. We sought to apply that similar formula to how the Ethereum collateral we were taking was secured. And we launched it in early 2018, and it only became about 3 to 5% of our loan book. It was not a significant line of business for us. And we found, just as a small team, back to your point about focus, that like to support multiple blockchains at kind of this root level is like really, really hard. It was really taxing for our engineering teams. And then Ethereum as well. I don't know much of its status today. I know that a lot of Ethereum infrastructure is solved by kind of using hosting services, but to just upkeep your Ethereum node through that era was a big chore. Often required being restarted every week, or just it needed to be on like the bleeding edge version of software kind of a thing. And so we made the business decision about a year later to basically stop supporting Ethereum. We sold actually some of those loans to another lender, and then wound down that offering. And our engineering team like celebrated and cheered, and then the business has never looked back really ever since. So I think that's just like a practical experience of just building this kind of business, and what do you discover as you try to venture out into supporting other things. I think there's other justifications. Just looking at Bitcoin is the most money-like of any of the assets, and so what is the business model for money? It's financial services. If we're a relationship-based financial services provider, let's work with the biggest base of money that is there in this ecosystem, and then if we can't make this business work and be profitable on the one, then like we shouldn't even think about the others. And then I think with respect to our clients, the brand promise we make with them, I think also Bitcoin is something that I'd say actually more in financial services generally, you want to work with providers that share some of the same affinities you do. And so as myself and more of the team here has just become even more convicted in Bitcoin uniquely, then it's kind of our opportunity to really stand on that as like, we're a Bitcoin only company. You can be rest assured that like the marginal technical developments and innovations we make are going to be around Bitcoin and your Bitcoin security, not in trying to help you secure some nth crypto asset kind of a thing. And I think our people understand that, and I think just demographically, for the kind of service we're not for the quote crypto trading degens or like meme like cycle. Like I have friends, I know there's people that do very well for themselves and like spend a lot of time in that space and find it interesting and a place of learning. However, a lot of Unchained's client base are people that are doctors, lawyers, real estate professionals. Like it's kind of your broad swath of like high net worth people that don't have a lot of time for that, or they aren't day trading throughout their week. They have professional lives they want to get back to. They heard about Bitcoin as a savings vehicle or something they should consider owning. They've watched it go up in price, and so now they want to have some. They want to participate in it, and they want to do it well and correctly. And so they look for maybe someone like Unchained to guide them, provide some education, and make them feel comfortable that they are they're doing it right. And then that's enough. And that's that's the business. It feels like I don't have to promise a lot more than that, and we can still be successful.
I mean, ultimately, Bitcoin is still by far the largest Web3 asset that we have.
Yeah.
It's sound money anyways.
Yeah.
So it makes a lot of sense. But times might be changing. Is there, recently with the sudden interest into ETH, is there some sort of like adjustment coming in from the client's interest, or is it just still Bitcoin only?
Yeah. Truthfully, honestly, I felt no client pressure or inquiries about, hey, can you help me secure something else? Or, hey, I'm looking at you versus some other solution. I would use Unchained if you supported more assets or type of things. I mean, a core way clients work with us, they use hardware wallets. We support the three most popular: Ledger, Trezor, and Coldcard. At least Ledger and Trezor, they support multiple assets, and so I anticipate our clients that are using multiple keys, multiple devices with us for their Bitcoin may, in many cases, have some other assets on those devices. They just may have to rely on a single signature kind of thing. So there's a way that I think the hardware wallet providers, through their tools and software, are doing a pretty good job helping clients secure, keep these assets secure in a self-custody format. But it's not really the role, or necessarily, again, and even back to that nuance of like multi-sig is not necessarily implemented in a apples to apples manner across these different assets. And so to then kind of try to give people as much of a like for like experience across these. I mean, that is where you have other kind of institutional custody providers like a Fireblocks or otherwise, and then those type of tools are wrapping they're wrapping the kind of like the native cryptography of each chain with like a proprietary cryptography, and then it's labeled multi-party computation, and then that's sort of the layer of consistency they're providing end users, who are typically like funds and some institutions and market makers and people like that, that might leverage a Fireblocks for a self-custody like experience.
Well, yeah, we are using any of those parties for our own fund. It's a very friendly software.
Yeah.
It's good, but that's bringing me also to the questions regarding custody, which is for people that are listening. And you mentioned before there are hard wallets like Ledger, Trezor, and multiple ones out there. Quite usually, people just have assets on Ledger and just keep the seed phrase themselves.
Mm-hmm.
And then not your keys, not your coins. But why is Unchained relevant for those holders, and what can you guys do for them?
Yeah, it really starts to become about resiliency or robustness of your security setup. Not your keys, not your coins is powerful, but if it's just one key for all your coins, now there's a single point of failure, whether it's through loss or something being stolen or theft. So that starts people down the path of trying to understand multi-sig, or how do I have some redundancy over my keys, and that I could suffer the loss of one, or one gets stolen, kind of a thing. So Unchained, we're really relevant at that step for clients, where they understand, they like to use multi-sig, they like to have multiple keys happening, and then the most common format of 80 to 90% of the assets we help secure are held in a 2 of 3 multi-sig, where the client holds 2 keys and Unchained holds 1. So in that manner, someone can keep a one key at their vacation house in Wyoming and the other one in their home, or put one in a home, one in the office. So you always want to maintain some physical separation between the keys that you're in possession of. And then Unchained is a third option as well. So like if you're just signing from your office, and then you can ask Unchained to sign for the second signature for your transaction. You're always wanting 2 of the 3 are required to move funds. We call it collaborative custody. It's kind of this unique format. It's something I spent a lot of time thinking about, just in terms of how unique it is in financial services. Financial services tend to be pretty binary. It's that assets are like either at the custodian or they're like in cash at your house, kind of a thing. So this type of hybrid approach is really unique and interesting. It creates a form of relationship depth, I'd say, with our clients, and that like we're in this together. We're securing the one of their most important assets together. And then that's also where matters of inheritance, which you mentioned earlier, really become relevant. It's like, okay, to the point of, if you have just the one key that you share with your wife, or like that your significant other knows where that is, but then you've put another one in a more super secret place, or a place that they're maybe apt to forget how to get to, or things like this. Now, in an instance where you die or you're incapacitated, and that next of kin or that person needs to access it, Unchained becomes a sort of point of help that we can help steer that person through based on what we know, or what documentation we have that says they're the next of kin or inheritor of some assets. We can assist with that asset transfer, that ability for them to now recover the Bitcoin, and that's really important for people, I think, that are taking Bitcoin more and more seriously as a household asset or a generational asset, and being able to be that partner in those kinds of transitions is important. I think that Bitcoin's great because it is such a sovereign technology. You can do this all on your own, and yet there is some value for trusted institutions, and especially insofar as like we prove both through our model and history and bearing that we're not here to take advantage of people, or we're not like again trying to hoover up Bitcoin to lend out and enrich ourselves, things like that. It's definitely different model than the firms we've seen die over the last couple of years.
Well, I mean, lately we see many different forms of security. And basically, if I look back from what we started with in 2016, 2017, it was very focused on self-custody, being anti-banks because the banks are deciding for you. Then during 2022, it came up again after FTX and all the parties that took place. What is, in your case, the biggest risk? If I hear you correctly, you've got 3 keys, and then if you have 2 keys, you can sign something.
Yep.
But what if those 2 keys are gone?
Yeah, then it's gone. That is the risk. It's kind of I liken it to just it's the trade-offs. You don't kind of get fully one without these others. Like that feature that says clients have the 2 keys, but if they lose them both, it's gone. It's also the thing that preserves the idea that they can move their Bitcoin without Unchained anytime. Our website is down, or we're hacked. Knock on wood, or anything like. It's just that anything the client is skittish about, or for any reason wants to move their Bitcoin, that they can do that on their own volition. Mm-hmm. So we like to preserve that property, but it does come with some personal responsibility on their side. And yet that's still a way we can help them, or we can educate them on feeling comfortable with that. We do offer some formats where either Unchained or partners of ours can hold like that second, or even in some cases all 3 keys. So it's been an area of some advancement for us, but it doesn't see a lot of uptick. I still say principally still like the core Unchained client, the core person that comes to us is somebody that wants that sovereignty, wants to hold their own keys.
I think it's all like you have that normal curve of adoption, right?
Yeah.
So like the early people are very inclined to go into self-custody, are very into it. But then once you get into the big mass, it feels to me they are more inactive and not really ready to have that responsibility over their assets. I mean, the entire society is not built on it.
Correct.
So how do you see that? Like, how are you, in your vision, going to onboard the next billion users if they need to have that responsibility?
Yeah. In some ways, I think it's just admitting to ourselves that Unchained isn't going to be for 1 million people. Or I'm sorry, or yeah, 1 million, let alone 1 billion, people. For us, the kind of financial service we provide, the type of clientele that skew, higher net worth. We're not necessarily dealing with people that are buying just $500 of Bitcoin and sitting on it. For that kind of financial service, we're probably limited for at least some time to just a few tens of thousands. It's not going to be like an absolute mass market type of solution, and that's okay. I think that's just sort of our back to the focus idea for us. But I think that to your point about just like how people enter the market and the different flows between them, I think it's been somewhat true that people, when they first get Bitcoin and they get on Coinbase, as they fall down the rabbit hole, or then they hear about news like the Canadian trucker protests, or the SVB bank failures, or the BlockFi, that stuff like that. Those those are our best months in new client onboarding. People find, finally this is the thing. Sending them to self custody. I think you'll continue to have those kinds of shocks that lead people to want to self custody over time. And I think it's been generally true that most people, it's kind of a one-way thing. They come to self custody and then they stay there. I have heard, more anecdotes as well as people that are, roll from self-custody or something else to the ETFs. And, the ETFs are a form of, there's competition, or there's a form of strong alternative that, there's a fee there. And they cost like between 20 and 25 bits, I think, generally. But because the environment of custodians and brokers and lending desks that lend against exchange-traded products and stuff like that, that's pretty mature ecosystem, people find there is value in just having ETFs. So we're mindful of that. It's back to just that idea of like helping motivate us to set the standard for how to have your self-custody Bitcoin be as convenient, as easy to use, as easy to get other financial services as say an ETF sitting in your brokerage account.
Yeah, ultimately there are just different products, and for everyone there's one. So either you buy the ETF or you have Bitcoin stored and you've got the keys yourself, whatever. There's a lot of things in between.
Yeah.
And when we talk about like using your Bitcoin or like the other products, I think you've had more than 1 billion in Bitcoin collateralized loans.
Yep.
That have been produced through the platform.
Yep.
How does that work? And how does the entire framework of those loans look like within Unchained?
Yeah, great question. So I think to tell the story about that product. I mean, it was the first place we started. We started lending at 50% loan to value, and it was cash. It was real dollars lent against the Bitcoin, so no stable coins. That required sourcing, dollars elsewhere in the market. My co-founder and I gave the first loans or financed those ourselves, but only had so much we could do. And so funders for that product have looked like over time, family offices, some high net worth individuals, credit funds, credit facilities. No banks quite yet, but I would anticipate, in the near future that we will have some bank participation on those loans. And so by now it's a pretty, robustly financed product. It's always been at this kind of 40 to 50% LTV range. We dropped LTV from 50 to 40 in 2021 during that initial run up to 60K. And there's that 40% really until I think about the last year. Interest rates have ranged from in the early days between 10 and 12%. And as rates rise, we were as high as, I want to say 15%. And now we're down to about 13%. It's unique, or one of the things that makes our product unique is back to that idea of clients holding their own keys. When you're taking a loan from Unchained, we give you an address, but that address, it has 3 keys. One of them is held by the client, so the client has one kind of cryptographic proof or tether to where their Bitcoin is, and then the two of the other keys are held by Unchained and a partner of ours. So we do have we have majority control. We can affect the sale, the foreclosure, the movement of those Bitcoins if there's a default in the loan. But by the client having a key, it provides some certainty, especially through that era of a lot of people, felt, traumatized, or just like the way the BlockFi experience or these other lending platforms led them to feel misguided about like where's their Bitcoin, like what's happening to it. Always at all times, the Bitcoin people provide as collateral for Unchained loans. You stay in that address or stay in that place where it was deposited. So we've never had a loan loss because we've never done anything fancy or in the way of lending out client assets. We've been through multiple cycles now. We're issuing our first loans in summer 2017, and earlier this year crossed that $1 billion of lifetime originations threshold, and it's a good product. Bitcoin's great collateral, and I'm proud that we have a track record kind of evidencing the right way, or like a really predominantly correct way to do Bitcoin backed lending.
I mean, as long as Bitcoin goes up, it's a great product to use as collateral. Which our big gambler Michael Saylor has basically been a big guy in just reusing the Bitcoin, getting more funding in to buy more Bitcoin. Are there like a lot of Michael Saylors doing the same through the platform, or what is the clientele taking this type of?
It's best I've tracked, on the order of about 10% of proceeds go towards what I call that kind of like margin trading, or like getting dollars to then go purchase more Bitcoin. It's not certainly something we tend to encourage, but nor is it necessarily like prohibited. But predominantly, most of the borrowing is used for other investments, like investments in commercial real estate. We had like a cabinet maker take a $250,000 loan to buy a bunch of new equipment, and saws and things like that for their shop. Some people, some of the biggest loans are usually for like a commercial real estate type purchase or investment. Some are, investing in VC or other startups. So right now we do commercial loans only. So they're to entities only. And from what we see in terms of the purpose for the loans that people report and what they tend to use them for, is mostly an investment like activity.
And if we talk about this type of thing, we recently see the big surge of Treasury companies and debts. What's your opinion on those?
I think it's like classically you begin to watch these cycles of things of exuberance or irrational exuberance for certain things, but that understanding, I think classically in that trying to remember that woman's name that wrote about these like capital and technology cycles. They pour good infrastructure, that's reusable. So like even if like railroads were an example of that in the U.S. of just big hype over railroads and railroad securities that then led to a bunch of over speculation, overpriced companies, and then as those collapsed and fell out, there was at least now this infrastructure of great railroads that were built on the incoming capital that came in, and then we saw that with like the internet era, of course, around 2000. I think there's kind of a version for that. It's just instead of physical infrastructure or like in these other examples, it's kind of I think it's both a mimetic infrastructure. It's like carrying the meme of Bitcoin and these assets more throughout the financial system and different institutions. And then also, I think just working on different products and different capital structures that can bring in dollars or bring in old money, into this kind of new money ecosystem. And we'll see new businesses get started, new things get built around that. But the shortcut is what I think that the trade of like I'm not a purchaser or holder or somebody that would go long these digital asset treasury companies personally. I'm already quite long a Bitcoin company and Bitcoin myself, so my stance is a little bit unique. But I think that's not. I think it's a great meme carrier, great way to attract new incremental capital into the space. Good way to hoover up some Bitcoin. I like the point say Zach Townsend from Meanwhile made in some investor magazine recently of just these might be looked at as maybe endowments, that these are the future sort of like the Carnegies of the world or wherever that had put a bunch of wealth into a trust or something that endures for a long time, and then out of its largesse finances projects and other interesting opportunities. I think that's a cool hypothesis that we'll have to see if these others really the non-strategy really had that first mover advantage. I think in a lot of the ways it could build up such a massive balance sheet, and likewise without a lot of I think it's one that can certainly survive some big downturns without the kind of onerous terms that will risk its ruin, while the other newer treasury companies as they're forced to raise in ways that takes on more risk. I think it just makes it all the more likely that they may go under in a big downturn.
Yeah, I mean, I think it's a good way if you use native Bitcoin, but once you start to issue debt, it's more risky, and that usually creates the next bubble. That is probably what we're going to be seeing in the next few years. So it's great to already start seeing the shape of the bubble and probably the collapse at some point as well.
Yeah.
And it brings me to, if people are going to use Bitcoin and get loans while having Bitcoin as collateral, if they start doing it a very high valuation for Bitcoin, at some point they get liquidated. How does that entire process work on Unchained?
Yeah, so we have a few margin call thresholds. Really one main margin call threshold. So we lend at this 50% LTV. You can think about that in the inverse of a 200% collateral value to principal ratio. So if you're looking for a $200,000 loan, we require $400,000 worth of Bitcoin. There's a margin call at that 150% threshold. So as soon as that Bitcoin collateral, if that started at $400,000, if it's worth $300,000, there's a margin call where the client has 24 hours to post more Bitcoin. And then if they don't, that would lead to a liquidation, and then they would get the remaining of any proceeds from that. So and then there's a fallback, or basically if inside of that margin call period, the Bitcoin price declines to 120% collateral ratio. So that same, instead of $300,000, it's now $240,000 collateral value for a $200,000 loan. Then that's like a full liquidation, or we would liquidate that out. And I think we haven't seen at Unchained really any price environment that's had those kinds of forced liquidations outside of March 2020 in the COVID era. At one time, BitMEX's liquidation engine was going wild. Those were crazy days, and that was the only time in my career so far that we I've seen as much as a 50% down drop in a single day. I think fortunately, just with the kind of maturity in the asset class, the amount of volumes, the amount of venues that the trading occurs, I do think it's highly unlikely we'll see anything like a 50% single day drop. That doesn't mean I think you could still see a 50% drop over weeks and months. I think that's certainly definitely still in the cards for Bitcoin. So yeah, in those instances, I think there's the caution, or the wisdom is always to never over leverage your Bitcoin. Only leverage as much as 10 to 20%, say max of your Bitcoin stack as a form of collateral. that lets you always, maybe write it off if needed at the end of the day if you do get liquidated, or give you plenty of dry powder to top up and keep the loan in good standing if you desire.
Well, I do remember March 2020. It was quite hectic.
Yes.
But as you were saying, it's the only thing that comes up is the fact that the markets are still relatively inefficient, which I also remember the fake approval of the ETF. I think it was like September 2023 or whatever it was.
Yeah, that was wild. Yeah, the SEC Twitter account, or like the chairman's account was like hacked. That was crazy. Yes.
There was like a very weird day, but during those days, the price can go absolutely wild and can create a lot of heavy wicks in the chart if you go to a specific exchange.
Yeah.
And that could cause some liquidation drama for anyone holding a loan. Or is that completely out of the ordinary for you guys and you have a complete system that prevents any liquidation wicks to occur? As in recently we also saw a weird one on Hyperliquid where they basically chased and a coin called XPL or something went up ballistically.
Yeah.
It's just a safety measure, and I'm just wondering how you guys are preventing those things of happening.
Yeah, I mean, it's a good question. I think it's partly about what kind of loan product is it, and around what type of asset. I think Bitcoin, at least the price feeds, the market that's there for trading and setting the price for it, is unlikely to have that 20 to 50% kind of wick range that would like send off a lot of alerts in our systems. And fortunately for our kind of system in this type of case, the Bitcoin's in cold storage the whole time. I think other like on exchange lending solutions that the Bitcoin's there, the Bitcoin's right next to the order book kind of a thing. And in that kind of system, you can affect auto liquidations. And typically people might be doing that type of borrowing around maybe non-Bitcoin assets that have just higher volatility. But in our case, there is really still a kind of a human buffer in between, price feeds and margin calls going out to then actually conduct any trades. So if our system's got some bogus price or just something weird or some price blipped at 50K Bitcoin or something like that for a minute, it's not going to lead to like mass liquidations. It's going to lead to a lot of alerts. It's going to lead to a lot of confusion and upset clients and things like this. But in all likelihood, is not as long as it's not like legitimately like where the price just reset, kind of a thing. It's unlikely to be mass liquidation event for us.
All right. I've also seen that you are working more and more with institutions. I think at the beginning of this conversation, you mentioned that more and more banks are eager to adopt Bitcoin.
Yeah.
But also universities, and in your case, the University of Austin is working together with you guys.
Yeah.
What does that mean, and what are they looking for in a partnership?
Yeah, University of Austin is a somewhat serendipitous arrangement. I mean, their headquarters, their campus is across the street from us in downtown Austin. And when they got started a couple of years ago, they were on my radar. I'm a college dropout, and so when I saw this kind of university started by former tech founders and people with a kind of a open-minded and kind of like tech forward type of university, I was keenly interested. So I started meeting with the people there, got to know some of the people in like the gifting realm, thinking I might make a donation. And I encouraged them that like, hey, I would make my donation in Bitcoin, but I'd only want to do that if you agreed to hold it. And I think that if you kind of walk down this path with me and come to understand Bitcoin more, you'll see also a lot of resonance with the kind of mission statement at the university and what Bitcoin represents and what Bitcoin represents to much of its community. So what was unique about the UBTX scenario is that the endowment they created for Bitcoin, it's a pledge that they're going to hold Bitcoin for 5 years or more. That like any Bitcoin they receive as a donation, they're not going to sell right away. I think that's unique. Plenty of universities by now will accept cryptocurrency donations, but it's probably liquidated right away or merge into some treasury management kind of a thing over there. So that pledge was important to me. I think it was a good signal as well for the Bitcoin community or anyone interested in supporting the university. And uniquely they use Unchained to hold their own keys And so I think there's a level of narrative that's about, you see it in other now like public statements from Harvard or other university endowments that they're holding, usually like the ETF, or like now like their portfolio managers have deemed it an acceptable asset or a good investment for the university's endowment. So that's one reason, but I think uniquely UATX also saw it as kind of this opportunity to make a name for themselves inside of a community that has a lot of shared values. And so there's been events that the university hosted, something called the Satoshi Papers, which was a volume produced by the Texas Bitcoin Foundation, which is more of like an education focused nonprofit here. That had some great papers just about like both the sociology and the economics kind of around Bitcoin and some of the changes that it's fostering. And so it's very academic like type of work. And the University of Austin hosted like a symposium where the authors of these papers, as well as some of the professors at the university, all kind of spoke and debated on these ideas. So I think it's also a cool place for that kind of discussion that they fostered. And their last trimester in the spring of this year had a Bitcoin class or Bitcoin course that was like one of their most attended courses, and just had a lot of engagement from the students. So yeah, it's just kind of a cool, both mix of grassroots and institutional focus thing.
It's actually really cool. I remember from my student times that one of my co-students was writing a paper about Bitcoin and got we have a scale from 0 to 10 or 1 to 10, and he got a 5, which is like beneath being a good one. And the reason for that was that the professor didn't believe in Bitcoin. So it's good that things are changing.
Yes.
And we also touched a little on IRAs and inheritance. And I think it's a topic that is going to be more important in the coming few years, where people start to hold Bitcoin for a long time. And if you have self-custody over your Bitcoin, it's quite hard to transfer it over towards the next generations. How does that work within Unchained? And what type of limitations are you getting from the regulators when it comes to transferring over your assets towards the next generations?
Yeah, it's a good question. I think thinking about inheritance is there's always has to be two levels. There's one level that is the title to the asset, and like the idea of like who owns it according to the legal system or a judge, who could contest who owns this thing. And then the second form that's important is physically, where does it live, how does it move, how is it then conveyed, is the control conveyed to another person. So Unchained's very well set up for the latter and much of the former. In the latter, we kind of talked about that example of these use cases where a household may have two keys. One is maybe kept in the house safe, the other is kept at someone's office, and then both spouses have access to the home safe. And so if one of them dies, they can access that key and they can contact Unchained and now work with Unchained. There's sufficient keys to move the Bitcoin. But whether or not Unchained will work with that person is another thing. That's where it then comes down to title. And so we do have features, for instance, that lets you identify beneficiaries, or if in the event of my death, here is the name of the person that's like authorized to now work on moving these assets with Unchained. And so that's a typical feature, like a supported format for us, not unlike again like a brokerage account or an IRA where you identify beneficiaries. And then things get more complex from there, and that's where people on their own may decide to set up trusts or other entities that the asset lives in. Unchained is actually very well suited for people to open trust accounts or accounts that are in the name of a trust. And then trusts, by their nature and like the documentation that supports the creation of that trust, that's where things are spelled out, like that if so and so dies, this is now the inherited by the children, or it's just still got to be maintained by a trustee until said date, until the kids are 18, or things like that. There's a lot of like customization that starts to appear in those kinds of structures, and so that's something we're advancing down the path of even further. I mentioned having a trust company now. So its role will be to be a trustee in some cases on client trusts, as well as a key holder and custodian or administrator for people's trusts. So inheritance, it's definitely one of those things. It doesn't always avail itself to just a clean boop, here's the product, here's a solution, just because there can be so much variance in terms of the individual and their family. And so often it is still the case that people need to work with an attorney or their specialist advisors around like their estate plan, where Bitcoin is just like one part, not necessarily the whole thing they're concerned with. So there's a lot of ways we've had to shape our solution to be workable within everyone's context as much as possible.
If you're talking to people nowadays to be onboarded within Unchained, a personal question: what's a belief you hold about Bitcoin custody or financial infrastructure that most people would push back on today, but you're convinced it will change in the next 5 years? I'm too far in the bubble to actually think about this. So, I mean...
What's something I'm convinced of, but that people are still... Yeah, I think that, some of it's the same, just that 5 years ago, the conviction was that self-custody is important, that people are going to want self-custody. And that's back to that idea of like talking to investors or just the market is like, oh no, nobody cares about self-custody. And there's by now like a lot more proof, a lot more substantiated evidence that self-custody is important. I think the other one we continue to kind of, feels a little quixotic or Don Quixote, I guess, but the like tilting at windmill is just about the idea that there's something important about this network of keys. Something that we kind of continue to try to prove out at Unchained is that increasingly the way a lot of clients on board is it's somebody who is already a Bitcoiner, maybe holds their own keys. They're trying to bring their uncle in to use Unchained and set up their IRA, but the uncle doesn't want to hold two keys, or the two keys thing. It's like, what is that? But now with Unchained, we have a layer of the application called Connections. So now that nephew can hold a key and through Unchained share it with the uncle's IRA, and then the uncle can have one key, and then now it's the uncle's key, the nephew's key, and Unchained's key. And so this kind of fabric of key holding that matches like real world relationships together is I think something really powerful, and a way to kind of align the social relationships, that web of trust we already have with people, with like now like the asset holding and like how assets are held, administered. And there's a lot of like phishing resistance that then now comes with that. So now your uncle's calling, hey man, I got a call from Google. They say I've been hacked. Like I need to move my Bitcoin from Unchained now. Like, can you sign for me? And now the nephew's like, what do you mean? That sounds crazy. No, don't. No, hang up. Like, don't sign, and like that's like a form of social protection against, phishing, which is so rampant in our industry now. If people impersonate the Googles and other central institutions of the world. So yeah, I think that, I think though the area that it's really further less proven in is just like how much institutions will then collaborate. I think there's the dream, the pipe dream is always that instead of all the Bitcoin living at Coinbase and like Bank of New York Mellon and like the top custodians, like what does it look like for those custodians to collaborate together and holding keys? And it's been hard to show a good business model, hard to show good economics that face these institutions in doing that. It's kind of part of our long-term vision. I still love to see bear fruit, but I think there's just too much incentive still for people to be the one custodian themselves versus like one key of a network of other custodians in a true format like that.
Fair enough. If you are not allowed to put a bet on Bitcoin for the next 10 years, what would be the bet that you would take if you could take only one?
Something that's like short the dollar, that's what's nice about like a mortgage or, even the Bitcoin backed loans in a certain way. It's like as a trade for people to be, short a dollar. I think that's like whatever you can do to keep a pace of the growth in money supply, which just seems to never going to end. So debt's hard. I don't like to encourage debt, and being short dollars means you're owing dollars in the future in a debt-like way. But between that and any way you can invest in yourself or like your own business and compounding some form of growth and learning there is also the other really attractive option.
Well, that's fair. I think the closest one that I've seen, and I've seen some people jump over from Bitcoin, is to gold.
Yeah.
which is the old-fashioned one.
Yeah, truly, yeah.
Very, very boring, but it's one of the assets that is the closest to Bitcoin. And then, which stage of the company you like working in the most? You have been building multiple. Current one is more than 100 employees. I'm a entrepreneur myself, and I kind of keep coming back to the first periods of building a company is the most entertaining one. Which stage is the most entertaining one for yourself?
I mean, I'd agree just in terms of, wiring and fun. I love some of the intellectual challenge of the early days of trying to get something really right, or like stage the rocket as perfectly as possible. And I'm somewhat of a survivalist, or like that motivation to not die in those early days, of just do everything necessary to not die is important. But I found, I think some of the wisdom is just as the stages are different, your role changes, and then there's new roles that open up that, as we recently hired a COO, for instance, or just in terms of like, what does it look like to run a business at our scale and size, and how can that, like that frontier of newness that I so much enjoy feasting on, how can I continue to have that from this vantage, and not feel dragged down by the day-to-day or what it requires to maintain something or keep trains running on time.
Well, if we look forward in terms of the growth of Unchained, what are the things that you're looking at the most for the rest of 2025 and 2026?
Yeah, it's a mix of, always trying to increase our client counts, also increasing the range of things we do for them. Have looked at, other markets, whether it's Europe or international, for what, what is there for in the way of either partnership or for Unchained to offer some services there. In general, we're more suspect and not get over our skis and lean into like getting licenses in other jurisdictions and things like that, but still valuable partnerships, other ways we might be able to enter those markets together with someone is something I think about. And then just seeing where the market in the US, especially around banks, goes. I don't see us doing like a white label or do anything overly tech heavy too soon, but certainly I think as more and more banks are looking to onboard into Bitcoin-backed lending, that's a place we spend a lot of time conversing with folks.
Well, thank you very much for joining the show. It's been very insightful to learn more about those loans and what you can do for your own custody and why it's important to have that completely straight. Where can people go to if they want to learn more about Unchained or if they want to follow you?
Yeah, we're easy to find, unchained.com. We're also on X, formerly Twitter, at Unchained is our handle. My handle is @JosephKelly. My email is joe@unchained.com. Feel free to reach out if I can be of any help.
Well, thank you very much once again. And good luck onboarding all those institutions and banks into the Web3 ecosystem. I'm sure it's going to be an entertaining period.
Thank you. Thanks for having me.